Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Dennis Dick. And we have Sheldon McIntyre on the line. He is the founder of the 360 Virtual Advisor. He joins us on the show, I'd say once every month or so, but if you look in the chat room almost every single day, Sheldon's in there and asking good questions and trying to get me to trick some of our guests. Don't think I didn't catch that, Sheldon. And but you're on today. How you doing this morning?
I'm doing well, and yourself?
We're doing good here on this Monday morning. I just wanted to first start out about your typical trading day. I know you're a longer term investor. Maybe do some short term trading, but not a lot. You're looking for longer term trends. Could you just maybe starting with the previous day's close, how you set up for the next trading day?
Yeah, sure. Well, basically, I just want to touch on, duration of my holdings. Usually the average trade I put on lasts about 10 to 15 days. At least that's been the case in 2014. So I don't generally hold on for, multiple months or anything like that unless I get a signal from the price performance, particularly early in the breakout, that I needed to hold it for a longer period of time. In terms of preparation for the market, yeah, I do. I do work at night always, but later at night, I find that I need to take a few hours off after the market closes to clean the cobwebs out, and then I get into looking at what stocks performed well during the day. I'm looking at stocks that are high liquid. I'm not looking at low price stocks. I'm not looking at stocks that are below 200,000 shares a day that have a small float. For example, less than 20 million shares a day. I look at the international markets. I look at the commodity markets. I look at the currency markets. I look at pretty much around the world. I try to get a macro feel for how the day went, because during the trading day, I'm more focused on individual trades than I am about what's going on around the world. And then I put down some notes, what I want to look at for my pre-market work. And then that's really where I get into the nuts and bolts of preparation. I usually get up about 4 or 5 hours before the market open, and that's where I start going through the stock screens that I have, and that usually takes about 2.5 hours. I run about 4,000 stocks through these screens, which is less than I do on the weekend. On the weekend, I run around 7,000 stocks through screens, and I focus mostly on price performance and stocks that have sharply improving fundamentals. And then I start looking at the charts themselves in terms of, are there stocks that have set up a high probability and constructive pattern? If so, what is the trigger price, minimum, maximum? Then I go over, I set that list together. I put my alerts in my trading platform here. And then I print the charts in many cases of the stocks I really want to get my hands on that trading day, if I can. And then I go over my existing holdings. I review them pretty hard. I look at, the trend for the week in terms of volume. I'm looking at their performance relative to their industry group, their sector, versus the market. I rely a lot on relative strength. I really believe that, one of the things I like about relative strength is that you can keep track of where the best areas of the equity market are, but also, what are the best international equity markets, the commodities, the currencies, etc. So that makes the process more efficient, but it also ensures that my money is being targeted to the best areas of the market where there is buying, And I do the flip side, obviously, on the short. When the market's really good, I don't put a lot of emphasis on screening for shorts, but when I feel the market might be topping, some of my proprietary indicators are pointing towards, at least a short-term top, maybe a correction. Then I start getting more into shorting after that.
So the duration of charts that you look at, dailies, huh? That seems to be at least when you're doing your longer term analysis, is that the shortest time frame that you look at?
Well, when I'm screening, I generally, for stocks, for equities, I start with the weekly chart. I want to see, when stocks are putting in a constructive base, I want to take a look at what the volume's been like, particularly on the right side of the base. Has there been a thrust in volume while the price has been advancing? And then if there's a consolidation taking place, for example, like a cup with handle pattern, you want to see the volume decrease as the handle shapes. I look at that on a weekly. Then I move to the daily. I look at, do we have an inside day? Do we have multiple inside days, etc.? How tight was the price action on the daily basis? And then when I'm locating, trigger prices, sometimes I will turn to a 60-minute or a 30-minute chart. For example, when Alibaba was coming off the lows there, I did use a 60-minute chart there to locate the trigger price that I wanted. And because there really hadn't been a lot of price history there, so a lot of times you got to be a little bit creative with the intraday charts to find a high probability setup. And in that particular case, there was actually a cup with high handle really that set up before it really broke off on that major advance.
Okay, and just one other thing you mentioned change in the fundamentals. Now, is this something that's based on your interpretation? Is it something based on the ratings coming from the major houses? Does it have to be an earnings, an acquisition? What do you characterize as a major change in the fundamentals?
Well, I'm looking for accelerating earnings, preferably accelerating sales. I'm looking for solid return on equity. I'm looking for growth over the previous 3 to 5 years. This is something let me just add the caveat that this is something I really focus on a lot. For example, where we had the market come off in October, when I'm looking to get back in the market, I really want to get in solid fundamental companies, but also with that set up on the charts as well. I have one screen that I use that I call it SEAL Team 6, where if I'm going to get into the fray again in the market, I want to go with the best, and
So
those
you,
use. Go ahead.
Sheldon, so you analyze the fundamentals first, and you get like a whole list of stocks that you like, and then you analyze the technicals for the timing. Am I reading you correct?
Yeah, that's correct. It's sort of like probability aggregation. I want to traffic in the highest quality stocks
Yeah.
fundamentally. And one of the beauties of platforms now is that once you set up a fundamental profile of a stock that you would like in terms of fundamentals, you can just enter the variables into a screening platform, and then it does all the work for you. You don't have to, get into spreadsheets too much unless you want to get into holding stocks for a long period of time, which I generally don't. And then I'm looking at the charts. I want a constructive base. I'm always looking to put as many variables in favor of the trade as possible. And that you have to, in my opinion, you have to put fundamentals and technicals together.
And what sectors are you looking at right now here, Sheldon? What do you like from your screenings right now?
Semiconductors still, for me, are by far the best looking area. I've been playing them really off the October low, and I think they're up like 30% now off the October 15th low, and they're beginning to outperform now in recent weeks the biotech space, which had been pretty powerful through at least early and in the mid part of 2014. So I've been focusing on there. And then really kind of one of the things about this market, and it's been talked about a lot, is the lack of breadth. It's a narrow leadership area. So really the other holdings I have are from diverse areas of the group that are different groups, sorry, that meet my fundamental criteria. And at this current time in my personal portfolio, I have 40% of capital invested in semiconductors.
Oh, wow. So you go heavy into a sector when you like it then.
Yeah, I mean, if you take a look, I think it was 3 weeks ago that the semiconductors really broke out. I think on a Sunday night before it happened, I said that semiconductors looked like they would be in play because of the tight consolidation that they had made, and then they really took off. I had started a couple positions though early in mid-October. I went in with what I considered to be the better stocks in the group, and I started accumulating.
What
Go ahead, Dennis.
specific stocks are you looking at from the semis? Is there any specific stocks you like looking at right now?
It's tough to find any that are set up at this particular point.
Okay.
They've all had a pretty good run.
Right.
I mean, I'm currently long AVGO, NXPI, SWKS are three ones that I like. Also, I have a position in RFMD.
So typically when these stocks are breaking out and making new highs, that's when you like them.
Yeah, I mean, obviously that's a sign that there's commitment to the stock. I personally have the belief or philosophy that if a stock is coming up to a 52-week high or an all-time high, and it breaks out into new price highs, and there's volume, and it takes off, to me, that's a sign of commitment. And that's why I like buying stocks that way. But in these particular cases, because these were stocks that met my SEAL Team 6 screen, I started buying them in October when I saw the shakeout on the weekly. So sometimes what I do when I want to get early into some stocks like pilot buys, I'll look for a shakeout and then on the weekly chart for it to close ideally in the upper 50% of the price range for the week. And then I establish the pivot at the high for that week. So going into the next week, I wanted to take out that previous week's high, and then I'll start buying.
Anything that's looking a little bit frothy to you? Anything that maybe you're looking at is for a potential short, or something in your portfolio long that you're getting a little itchy to get rid of?
At this point, I don't really have anything that I'm itchy to get rid of. Well, I have Celgene, and I see it's gapping up again today. It's been getting upgraded like crazy here for the last 2 weeks. So that begins to bother me a little bit when everybody's jumping on the boat.
Right, crowded.
Right? Institutions.
Yeah.
I see that I think Cantor and I don't know who else raised the price targets again here. So that's one I might look to liquidate today, even depending on how it trades. But I am short also. I do have 3 short positions. I think the gaming sector in particular could have a lot more downside. I'm short MGM. The Macau numbers that are coming out are not too good. They've been revised lower for 2014 and also for 2015. So I am short MGM. I'm also short Jacobs, JEC, in the construction, global. It's really global construction and projects, etc. I think there's been a slowdown there, and it seems that company management's not too solid there. So I am short that. And I've been short, I'm not short currently, but I have been short CSIQ in the solar space. I've shorted that twice in the last couple of months with pretty good success, actually.
What are your thoughts here on the solar companies as we're looking at $64 oil here this morning, and a lot of people saying that it's not good for solar when this oil price continues to go down because obviously that's alternative energy?
I agree somewhat with that. It's really how long oil prices will stay down. If you think that this is a secular development where oil prices are going to be down or continue to go down, then I think, in a 6 to 12 month time frame, I think that if you want to be short, you probably would make money. But I don't think you're going to see the impact immediately in terms of people lowering their outlooks or their individual company fundamental outlooks. I was, for example, I use charts a lot more in my shorting than I do in fundamentals. I shorted that earnings. I think actually I said it on the stream with you guys when CSIQ report earnings and it was gapping up that I would look to short that.
Oh, nice.
And I did short that day. And then I think I held it for a couple of days. And then I just shorted here in end of November. You'll see it dropped like I think over 10% one day. And one of the services that I use, Market Memory, I looked at the days where it had fallen more than 10% and what it did the next day, and it showed that it pays to hold it through the next day, and sure enough, it dropped about 8.5 or 9% on the close. So I covered that day on that particular trade.
Nita wants a quick look. I don't know if this is something that you're active in at all. SWIR, you talk about stocks that are breaking out. Had a clean breakout on Friday here above the 40.83 level, sprinted up to 42. Is this something that, gets your interest when you have that kind of breakout? And not really breakout volume, but just a quick look at SWIR for us?
Yeah, that was on my watch list last week. I actually didn't play it simply because I was traveling towards the end of the week, or I would have actually played that. It doesn't meet my high-quality fundamental screen, so I would view it as a shorter-term trade. But, it broke out volume on Friday, hit, above average. And the RS line confirmed the new price high. So, certainly there's something up there, and it's certainly tradable. I don't know if it's a long-term hold at this point, but I liked it last week.
big run here. I'd keep an eye on that all time, or not all time, but that close from Friday, 41.82. Well, Sheldon, what I wanted to get to you here, and I'm going to do it here at the end of the conversation, is your outlook for interest rates. We've been going back and forth in the chat a little bit, and some of the people that we talked to on the show just think the Fed's going to hold real steady in 2015, but you don't have the same outlook for interest rates. Could you just touch on that briefly?
No, I don't. Actually, if you take a look at what the markets are looking for, they are looking for, I guess, July or something like for rates to begin to rise. I'm inclined to think that it could be even earlier than that, maybe even in the first quarter of next year. I really think that the Fed wants to put a hike into the markets and see the reaction. We had that whole process of global verbal easing as well as actual easing, off the October lows. And, one of the things that stood out for me about that was this, Bullard's 2 or 3 step that he made there. He was, at one point, before the market fell off, he was saying that there was room to raise rates. And then right at the low, he said no. And then as the market recovered again, to his first comment, he was saying, okay, yeah, maybe we could. And then I think he threw something out. I think it was last week or the week before, where he said that he didn't think that it was necessary for the Fed to raise rates when they were having a press conference, on the days they have press conferences, because they don't have after every meeting. And I thought that to be kind of interesting, because maybe they're thinking, okay, why do we need to do this when there's a press conference? Let's throw a trial balloon out there and see how the market reacts. And I also, then when you throw in the fact that the other central banks, not the EU, but Japan, China, et cetera, did their programs, stepped up their programs. And then the fact that EU is holding off this year on the sovereign, which I think they will do. I think that that's going to coincide with the Fed making its first hike. And based on what the news you're hearing out of Europe, that's supposed to come in the first quarter.
Okay.
So I think that could balance, be a way to balance the impact of a Fed hike, a trial balloon.
All right. Well, we'll keep an eye on that. Sheldon McIntyre, founder of 360 Virtual Advisor, joining us here on Benzinga's Pre-Market Prep, brought to you by MarketFi. Sheldon, thanks for your simple, no-nonsense approach to the markets. Also, thanks a lot for coming in the chat with your questions and ideas. I think we appreciate, as well as our guest and our trader as well. So we'll talk to you again soon.
Thanks, Joel, and thanks for the invite. Take care.
Thanks, Sheldon.